Hey everyone, welcome back to Corporate Decoder, the place where we simplify the complexities of the business world. Today we're diving into Iridium Communications' latest proxy statement. Get ready for some potential shareholder drama as we uncover proposals ranging from executive pay to limiting officer liability. Let's see if they're reaching for the stars or just protecting their own orbits. This document outlines important information for Iridium's annual stockholder meeting on May 14, 2025. It covers everything stockholders need to know to vote on key company decisions. Think of it as a roadmap for deciding the future direction of Iridium. First up, stockholders will be voting on the election of 10 directors. These are the people who will guide the company's strategy and oversee its operations. It's like picking the captains of the ship. Next, there's a say on pay vote, where stockholders get to give their opinion on how the company's top executives are compensated. It's non-binding, so the board isn't required to act on it. Still, it gives them an idea if the stockholders are happy with the executive salaries, bonuses, and stock awards. There's also a vote to ratify the selection of KPMG as the company's independent accounting firm for 2025. This is more of a formality, but it's important to make sure the company's books are being checked by a trusted auditor. Stockholders will also vote on approving the amended equity incentive plan. This plan allows Iridium to give stock options and other equity-based awards to employees, directors, and consultants. It's a way to motivate people and align their interests with the stockholders. Then there's a proposal to amend the company's certificate of incorporation, limiting the liability of certain officers as permitted by Delaware law. It's about attracting and retaining good leadership by offering them some protection from potential lawsuits. Only stockholders who owned Iridium shares as of March 17, 2025 can vote at the meeting. The meeting itself will be held virtually. The board recommends voting for all of these proposals. The proxy statement provides detailed information on each of the director nominees. It covers their age, experience, and qualifications. It's worth checking out to see who is guiding the company. It also tells you if they're independent or they have a conflict of interest. That's why the board makes a point of stating who is independent. The company is very clear that it thinks these are people of high moral standing with a lot of business acumen. It also notes that some are on other company boards. The document dives into the details of the board committees like the audit committee, which oversees the company's financial reporting, and that all the members are independent. It also describes the compensation committee, responsible for executives are paid according to their standing and experience. Finally, we see the nominating and corporate governance committee. These people look at who gets to be on the board and make sure they are behaving themselves. Let's move on to the proposal to ratify KPMG as the independent accounting firm. Here we'll find what the company paid them last year. In 2024, audit fees totaled about $1.1 million. That is the cost for keeping the books in line. Let's go over the approval of the equity incentive plan. There is a request to increase the number of shares available for issuance under the plan by 4,500,000 shares. This would bring the total to just over 38 million. Here we can also see that they mention what their total overhang is. Basically, it's how much of the company could be issued if all stocks were exercised. The key plan features prevent things like repricing stock options without stockholder approval or giving executives crazy payouts if the company gets bought out. It also discusses things like the minimum vesting period, how long someone needs to work there before being able to have the equity. They have a burn rate table which shows how quickly they are issuing shares. We can see that the most recent number is from 2024, where they have issued 2,000 their weighted average shares. It's a common practice, but something people do watch as it's very important for a share to be worth a decent amount. Here they go over an amendment to limit the liability of certain officers. It essentially means that officers get legal protection similar to the protection the directors already have. Let's scroll to security ownership to see who really controls the company. Here we can see a few major holders who all have over 5% of the company. That includes BlackRock, Vanguard, and Barron Capital Group. It's also important to check in on how many shares the executives have. This is good. It means that executives also have something to lose if the company doesn't do well. Now for the part everyone loves to hate, executive compensation. The base salaries of the executives saw modest increases of 3 to 6% in 2024, and you can check each person in the table. We also can see here what percent of their salary is part of their target bonus. The CEO's target bonus is 100% of their salary, while some other executives get 65%. They go over how they pick their peers and benchmarks. It's worth a read if you want to get into the nitty-gritty. The big bonus payouts were for hitting OEBATD, achieving some strategic goals and having network and quality metrics in line. 60% of those bonuses were paid in shares, which again helps align incentives. Okay, I'm kidding, there is nothing interesting there. Now we are going to see some information on pay for performance. This shows how well the CEO is being paid and compares with company performance. As required, the pay versus performance table shows the total compensation of the CEO and how that relates to the total stockholder return and net income. Basically, the SEC wants to make sure the CEO's pay isn't completely disconnected from how the company is doing. Finally, a quick look at director compensation. It outlines how much the board members get paid for their services. This section talks about conflicts of interest with related parties. It shows how the company has a policy to prevent those conflicts. And that is it. You are all up to date with what the company wants you to know. Tobit, so what's my take on all of this? Iridium seems to be in a decent position. They had some good financial performance, which might be why they want to pay executives more. Also, I like that the executives are also invested in shares because it incentivizes them to grow the company. One notable risk is their reliance on government contracts. It's a source of revenue, but it can also be unpredictable. Axdoderol Iridium seems to be heading in a positive direction. That said, one thing that stands out is how much power the board has. That is why they recommend voting for what they put in the document. If you are an investor, it is something to pay attention to and understand. Okay, that's all I have for you today. I really hope that was helpful. If you enjoyed this video, please like, comment, and subscribe for more corporate deep dives. It helps me a lot and lets me know I'm providing useful content. Until next time, stay informed.